Okay, great. Thanks for having me. And I'm just going to give a verbal to change slides. So if we can change to the first slide, please. So as Alex said, Credible is a US-based company. We're an online, millennial-focused, end-to-end loan marketplace. So I'll describe what that means on the next slide, but I want to start by just describing the market we operate in. The US consumer loan market is enormous. Within the category that we operate, there's about 1.7 trillion US dollars of loans originated per year, mortgages being the vast majority of that at 1.6 trillion. This is a business we got into in the last 6 months after about 18 months of building out the platform, leveraging a lot of our core proprietary technology that we've built up over the last 6 years since we were founded in 2012. As Alex mentioned, we're in the mortgage space, we're in the personal loan space, and we got started in the student loan space back in 2012. Our model is a little different to a traditional online lead generation platform, and I'll describe that on the next page. What's important is that we work with both sides of the marketplace. We have just under 40 lending partners or issuer partners who are providing product to our marketplace, and we have over 260 marketing partners. Again, I'll go into some more detail on this in a couple of pages, but that's a critical part of our distribution strategy and a differentiator for our business. We've originated just under 2.8 billion US dollars of what we call cumulative loan volume since we were founded. And in Q1 2019, we're a calendar year end, we processed just over 13,000 loans through the platform over that 3-month period. And just to give people a sense of size of our team, we're about 130 employees, where about 25 full-time equivalent employees would actually be processing loans on a daily basis. So we really are a technology company. We're processing over 13,000 loans a quarter with just 25 people. And that really speaks to the power of the platform that we've built. It is all proprietary technology, from the user experience through to our integrations with lenders and credit bureaus, through to our multi-product CRM system that we've built up over the years, and really focused on building a centralized platform to understand all the interactions that consumers have with our platform. On the next slide are the details of both sides of our marketplace. So very simply, think about the business as a place where consumers can come and get access to multiple loan offers from multiple lenders. And that's A. And B, if they see something they like, they can get that product all within our platform. So there's really those two core pillars of value prop for a consumer who comes onto the platform. In less than 3 minutes, you can compare actual rates from multiple lenders. So they're personalized based on an individual's credit profile and based on real underwriting models of our lending partners. So we house the underwriting models of our lending partners on our platform. And we provide this what we call digital concierge style service, a click-to-close experience all within the Credible platform. So you're not going off and applying directly with any of the lenders we work with. You do it all within our platform. So that obviously allows us to control a significant portion, really the whole entire origination experience. That's on the consumer side. On the lender's side, really what we're doing is we're providing an efficient way for our lending partners to acquire customers. So we really turn what has traditionally been a fixed cost of customer acquisition into a variable cost. So we generate revenue when a borrower takes out a loan product and not before. So we're not selling leads, we're really selling customers, or we generate revenue when customers select a product. We have a national program, so we give lenders access to a national audience, with the exception of mortgage, which we currently operate in 37 states. We launched our home purchase product in Q1 this year, so it's a new product, and we're very rapidly, for those who aren't aware, you have to get licensed in every state you want to operate in the US. We've very rapidly secured 37 licenses in various states around the country, representing about 81% of mortgage originations. If we go to the next slide, there's some more detail here and some examples of some of the partners we work with. I mentioned marketing partners, which are now over 40% of our customer acquisition makeup. And we like these marketing channels, these partnership marketing channels, as they are more predictable channels for us. They're more durable and they're higher margin channels. So we're partnering with online affiliates, alumni associations, professional groups, employers who make our platform available to their constituents, whether they're, as I say, affiliate users or employees or association members. They make our platform available, and borrowers self-select in through the experience and self-select the product that they wish to choose from the various lenders we work with. On the lender side, we work with 38 institutions, up from 24 at the time of our IPO. These lenders, some of the logos will be familiar to people and some won't, but they really do span the breadth of the market. So from big banks, we work with Citizens Bank, and Sallie Mae is a very large student loan provider. We work with Marcus by Goldman Sachs, SunTrust, a very large regional bank, all the way down to some of the fintech companies who are really more wholesale funded than deposit funded. So we have a very broad range of lending partners across our various products. On the next page, we just walk through some of the, if we can flick to the next page, please, thank you. Some of the key investment highlights. So this is really looking at the momentum that we've built in the business, particularly over the back half of last year and the first quarter of 2019. So we originated around $1.1 billion of loan volume through the platform in 2018. Notably, the second half of the year, we doubled closed loan volume through the platform and really only added about 22% headcount, which corresponded to about 22% below the line expense growth. And that, for me, was a really important takeaway from 2018 and really demonstrated the scalability of the platform. We've continued that momentum in the first quarter of 2019, which we had a very, very good quarter. Really, the best way to describe it is we had some tailwinds in the business, very strong start to the year as a result of some seasonality, and we originated $440 million just in the first quarter. Our second quarter is traditionally our slowest quarter of the year, and we expect that will be the case this year. Less seasonality in both our student loan and personal loan businesses. In terms of revenue generation, generated $26.4 million in revenue in 2018. We run at about a 2.2-ish% revenue generation rate on closed loan volume, and that's been very consistent for us particularly over the last 18 months. As I mentioned, we operate now in 37 states in mortgage. We really accelerated the launch of this platform. The US is going through some significant change within the real estate space, and we are very, very well positioned with the first of its kind end-to-end online marketplace. In the Australian context, you'd call us an online mortgage broker. And we're really excited about this platform. We've had some early validation with some pilot partnerships, one of which we announced in our quarterly update with Realtor.com, which is the second largest real estate platform in the US. So we're excited about the potential that Credible has within the real estate market, and there are many, many players that we could potentially partner with given the size of the market. We've been very thoughtful with the way we invest our capital and our shareholders' capital. We finished the quarter with just under $26 million US of cash and cash equivalents, and we're burning roughly about $1 million a month. So we really do have a couple of years of runway still. We have been public since December 2017, and at the time we said that the cash resources would last us 2 years. We're 18 months down the track, and we still really have 2 years of cash resources available to us. If we flick to the next page, which I think is the last page, or the second last page, the growth has been considerable over the years and has been and has resulted in almost 1.5 million user accounts on our platform with an exceptional Trustpilot rating of 9.6 out of 10. And as I mentioned, we've originated cumulatively or just under 2.8 billion in closed loan volume through the platform. So as we look forward and flicking to the final page, we might just jump that page to the final page. I know we're short of time here. Thank you. If you think as we think forward and look forward to 2019, 2018, we really did deliver on our priorities, and we strengthened the marketplace health of our platform by adding and diversifying both the marketing partners and the lending partners on our platform. We demonstrated significant scalability of our platform, particularly those numbers I mentioned in the second half, doubling volume with a corresponding roughly 20% increase in our below the line expenses. And we maintain a strong cash position as we're through a quarter of the year. And our momentum that we really saw over the back half of the year certainly continued into the first quarter of 2019. So we have a massive market, we're very well positioned, and we have the resources to execute against our strategy. Thank you.